Let me share with you that I was in Washington, D.C. last week talking to pollsters and strategists, and one of the things that really struck me is how little conviction everyone seems to have going into these midterms. Midterms are always harder to poll and to model than national elections, and these midterms are not inspiring partisans, certainly, with the likelihood that their side's going to win. We are pretty much aligned with the street in terms of expecting a split, but what I have really emphasized is that investors need to be prepared for the plausible outcomes and not just think in terms of a base case and a tail risk.
Well, how do you do that then? How do you prepare yourself economically and from an investment perspective for any possible outcome?
Well, with that in mind, a lot of investors are going to sit this one out, having been burned by the 2016 presidential elections, where some pollsters had a 91% probability of a Hillary Clinton victory, and likewise with the UK referendum. Both of those outcomes, by the way, were two out of the three biggest one-day moves in markets for the last 3 years. So I wouldn't be surprised by those who want to sit it out. But what I'm suggesting is we need to think about the outcomes that are mathematically plausible, right? And with that in mind, the second most likely outcome, in our view, is Republican status quo, keeping both chambers of Congress. And that, I think, would see a rally in markets. A blue wave in both chambers is something that is possible, but very difficult road for Democrats to get to. That would require very high Democratic turnout and historically very low Republican turnout, and both sides are quite energized as we go into this race. Yeah.